Hey crypto enthusiasts! Welcome back to another exciting update in the world of Bitcoin. I'm your host, and today we're diving into the recent frenzy around Bitcoin ETFs. It's a thrilling time in the crypto market as ETFs are making waves, drawing attention and funds like never before. With the landscape shifting and new players entering the game, there's a lot to dissect and understand. So, if you're as curious as we are, hit that subscribe button and let's get into it. So, hot off the press, Bitcoin ETFs have made a grand entrance into the market, raking in a whopping $1.4 billion in just the first two trading sessions. Now that's a headline that's hard to miss. But as always, let's dig a little deeper to uncover the full story. According to Bloomberg ETF analyst Eric Balchunas, these funds have seen a total of 500,000 trades, with the trading volume reaching an astounding $3.6 billion. Now, if those numbers don't make your head spin, I don't know what will. But wait, there's a plot twist. As we celebrate the success of Bitcoin ETFs, Grayscale's Bitcoin Trust, also known as GBTC, experienced an outflow of $579 million during the same period. Now you might be wondering, why are investors pulling out of GBTC at such a crucial time? Well, it seems that the US Securities and Exchange Commission, or the SEC, played a significant role in this. After the SEC approved ETFs through a ruling change, some GBTC holders started exploring other options. Skybridge Capital founder Anthony Scaramucci even mentioned that some GBTC holders are cutting losses and exploring lower fee options. So, what does this mean for the Bitcoin market? While Bitcoin ETFs are seeing massive inflows, traditional Bitcoin trusts like GBTC are experiencing significant outflows. It seems like investors are playing a game of musical chairs, moving their investments around to get the best deal. But let's not forget about the winners in this story. BlackRock's iShares Bitcoin Trust, or IBIT, leads the pack with a mind-blowing $497.7 million in total flows. Not too far behind is Fidelity Advantage Bitcoin ETF, or FBTC, with $422.3 million, and Bitwise, or BitEB, attracting $237.9 million. Hold up, what's going on here? Well, it turns out, some GBTC holders are making moves after the US Securities and Exchange Commission, SEC, gave the green light to ETFs through a ruling change. You might be wondering, what exactly does this ruling change entail? Well, the SEC's new stance allows Bitcoin futures to be wrapped into a traditional ETF structure, which provides an avenue for institutional investors to get exposure to Bitcoin without the need to directly hold the asset. This is a major shift in the regulatory landscape, marking a significant milestone for the acceptance of Bitcoin in mainstream finance. As a result of this ruling change, Grayscale's Bitcoin Trust, also known as GBTC, experienced an outflow of nearly $600 million. Now this might raise some eyebrows. Why are investors moving away from GBTC? The answer is simple: fees. GBTC has been criticized for its high management fees, which currently stand at 2% annually. On the other hand, the newly approved ETFs offer lower fees, making them a more attractive option for investors. To put this in perspective, consider this. A 2% annual fee might not sound like much, but over a 10-year period, it can erode a significant portion of an investor's holdings. So it's no surprise that GBTC holders are exploring other options. And it's not just us saying this. Skybridge Capital founder Anthony Scaramucci, who has been a vocal supporter of Bitcoin, recently revealed that some GBTC holders are cutting their losses and moving to lower fee options. According to Scaramucci, the outflows from GBTC are a direct result of the SEC's ruling change and the subsequent launch of Bitcoin ETFs. These developments point to a shift in the investment landscape. With the SEC's approval, Bitcoin ETFs have not only gained legitimacy, but are also posing a challenge to existing investment vehicles like GBTC. It's a fascinating time in the world of Bitcoin, and we can't wait to see how this all plays out. Now let's talk winners. Topping the charts this week is BlackRock's iShares Bitcoin Trust, or IBIT, with a staggering $497.7 million in total flows. This ETF has truly made its mark, offering investors a new way to access the Bitcoin market. Not far behind in the race is Fidelity Advantage Bitcoin ETF, also known as FBTC, with a commendable $422.3 million. This is a clear testament to the trust investors place in Fidelity's long-standing reputation within the financial industry. And let's not forget Bitwise with their ETF, BITB, attracting a cool $237.9 million. Bitwise, known for their focus on index and beta crypto assets, is certainly making waves in the ETF space with this impressive figure. But it's not just about the top performers. What's fascinating is the diversity we're seeing in this emerging market. From established financial giants to crypto-focused firms, a wide range of players are stepping into the Bitcoin ETF arena, each bringing their unique approach and strategy. This diversity is not only a sign of a healthy, competitive market, but also offers investors a variety of choices to suit their individual needs and risk profiles. Whether you're looking for an ETF with a strong track record, lower fees, or a specific investment strategy, there's likely a Bitcoin ETF out there for you. But let's not get too carried away. While these figures are certainly impressive, it's important to remember that the ETF market, especially in the crypto space, is still very new and highly volatile. As with any investment, it's crucial to do your own research, understand the risks involved, and make informed decisions. So there you have it, a snapshot of the top-performing Bitcoin ETFs and the exciting diversity in the market. These numbers are painting quite the picture, don't you think? But here's the kicker. Despite the initial excitement, Bitcoin faced a 6.8% decline in the days following the ETF approval. This might have taken some by surprise given the hype around Bitcoin ETFs and the anticipation that it could propel Bitcoin to new heights. But as it turns out, the cryptocurrency market is a bit more complex and unpredictable. Now, you might be wondering what caused this dip. Well, it seems to be a classic case of a sell the news event. This is a common phenomenon in the financial world where investors sell their holdings after a highly anticipated event occurs. In this case, the approval of Bitcoin ETFs. The speculation and anticipation leading up to the event can often inflate the price, and once the news breaks, some investors take this as a cue to cash in on their profits, leading to a price drop. It's important to remember that while ETF approval is a significant milestone, it doesn't change the fundamental value of Bitcoin overnight. It's a step towards greater financial integration and legitimacy, but it doesn't guarantee an immediate price surge. The ultimate impact of Bitcoin ETFs on the market will likely be seen over a longer term, as institutional investors become more involved in the crypto space. This dip, however, didn't last too long. Bitcoin rebounded, showing its resilience once again. There's a saying in the crypto world: volatility is the name of the game. So, while a short-term price drop might seem alarming, it's just part of the journey in the world of cryptocurrencies. In the aftermath of the ETF approval, we've seen a mix of reactions. Some are cautious considering the volatility, while others are optimistic, viewing this as a stepping stone towards mainstream adoption of cryptocurrencies. It's a fascinating time in the world of Bitcoin, and these are the moments that make the crypto market such an exciting space to be in. So where does Bitcoin stand now? As of now, Bitcoin is trading at $42,856. It's a wild ride, but that's what makes it interesting, isn't it? Wrapping it up, it's clear that the world of Bitcoin ETFs is off to a roaring start. We've witnessed a whirlwind of activity with these funds storming into the market, and a staggering $1.4 billion pouring into them in just the first couple of trading sessions. Yet, the plot thickens with Grayscale's Bitcoin Trust facing significant outflows, as some holders scramble to explore lower-fee alternatives in the wake of the U.S. Securities and Exchange Commission's ruling change. And let's not forget our top performers, with BlackRock's iShares Bitcoin Trust, Fidelity Advantage Bitcoin ETF, and Bitwise leading the pack. Their impressive inflows paint a pretty vivid picture of the current state of the market. Despite this flurry of activity and initial excitement, Bitcoin's price took a slight hit post-ETF approval, reminding us that the crypto market continues to be a roller coaster ride of ups and downs. Looking ahead, the future of Bitcoin ETFs is as thrilling as it is uncertain. Will we see more investors flock to these funds? Or will the initial hype simmer down as the market adjusts to this new player? Only time will tell. What are your thoughts on these ETF moves? Drop them in the comments below, and as always, subscribe, and hit that bell for more crypto updates. Until next time, happy hodling.